Is Tesla better thought of as an AI firm or as an EV company? In the competition to be the greatest company in the world, can Tesla succeed on its own? Some of the questions that people find themselves asking are these ones. Why? Because the answers to these have the potential to increase or decrease your wealth. We'll answer these queries and go over Tesla's current activities in this video. We will also hear Ives' perspective on Tesla. Whether it's their EVs or their AI, Tesla has been refining their business. Apart from that, they have been working with other businesses. To learn more, continue to watch. But first, don't forget to subscribe to Tesla Stock News and give this video a thumbs up. Regarding Tesla, various fascinating viewpoints about its identity have surfaced. Although most people consider Tesla to be an electric car manufacturer, there is a growing belief that it is actually an artificial intelligence firm. A change in viewpoint like this might have a big impact on the company's future, especially in light of all the hype surrounding AI. Notably, Ives, a Wall Street analyst, views Tesla as a tech firm and thinks the company will reap significant benefits from the current wave of AI. Being one of the best analysts, his opinions are highly respected, so it is much more worthwhile to investigate his point of view. Let's discuss the general health of the tech industry before getting into AI. Ives predicted that tech stocks would rise by 20% earlier this year, and as of May, the Nasdaq had already jumped by 24%. So the question is, what is the remaining amount of growth potential? Ives believes there is still 10% to 15% upside left in the tech sector. Strong fundamentals, better than expected forecasts, cost-cutting initiatives, and the idea that the tech sector is a safety net are some of the reasons for the confidence. The AI revolution, which Ives views as his career's most revolutionary tech subject, is actually what will change things significantly. Ives speculates that AI may play a significant role in Tesla's future. At first, perceptions of Tesla as an AI firm may be slow to develop, but they may quickly change if it becomes evident that Tesla is well positioned to address autonomous driving. Two prominent figures who have influenced Ives' thinking to support this viewpoint are Hallmark's collection of complete self-driving movies in San Francisco and James Dahmer, who is someone you should follow. Ives is now persuaded by these that Tesla has a real possibility of becoming into an AI firm. While there are engineers employed by Tesla in Vancouver, the performance level is higher in the San Francisco footage. Ives is more confident in Tesla's Dojo supercomputer's chances of success, even though Elon acknowledges they are slim, especially in light of Elon's prior successes with SpaceX and launching the electric vehicle (EV) market. Ives conservatively calculates that, given the market potential, artificial intelligence (AI) represents an $800 billion market opportunity with potential to reach trillions. This outlook dispels the idea that we are now living in an AI bubble. Ives makes the case that it's more like a gold rush, pointing up NVIDIA's phenomenal rise and their historic 60% quarterly projection hike. This expansion affects NVIDIA and has repercussions for hyperscale firms such as Google and Microsoft. It also has resonance with Apple and Meta, among other companies in the consumer tech space. Ives highlights the wider ramifications for the chip business, software brands like Palantir and Salesforce.com, and the tech sector as a whole. Even with all of the hype surrounding AI and the possible gold rush, some investors still find it difficult to accept Tesla as an AI firm. The historical performance of the stock shows times of relative stagnation interspersed with notable swings. For Tesla investors, though, the difference might not be as significant. Whichever way the company is categorized, it has proven to be able to fascinate the market, and investors tend to have short-term views. Looking at Tesla's past reveals that there have been huge advancements at certain points that make earlier developments seem irrelevant. There have, however, also been times of consolidation during which the stock stays unchanged for roughly 5 years. Things have started to improve recently, with Tesla seeing tremendous traction and rapid expansion. It's anticipated that the current consolidation phase will finish once it's widely accepted that Tesla is essentially an AI corporation. As we talk about other businesses in this industry, the question comes up, are there any cheap possibilities that haven't seen their value soar yet? What distinguishes the victors in this field from the losers? The companies Microsoft, NVIDIA, Google, AMD, and a few more are thought to be the apparent winners. In terms of software, it's important to investigate second and third derivatives, like the seemingly unrealized potential of Salesforce.com. Given their fundamental interest in AI, controversial names like C3.ai and SoundHound Palantir are also worthy of consideration. Ives also thinks Tesla will benefit greatly in the long run from the AI revolution. AI is only getting started on an exciting adventure, and this week's differentiation was very obvious, indicating that the race is officially on. Now let's talk about electric cars. Tesla is a clear winner here, as its stock has increased by roughly 6%. It has even eclipsed the Toyota Corolla in sales to take the top spot. In addition, Tesla shocked everyone by declaring a collaboration with Ford. The stock price of Tesla has surged, much to the satisfaction of investors, even though drivers may not be thrilled about sharing their superchargers. For Ford, too, this collaboration may change everything. It is noteworthy that Tesla currently holds a market share of more than 50% in the United States. As a result, even if someone had planned to buy a Ford EV, they might decide to buy a Tesla instead after weighing their options. As more electric vehicles, EVs, are available on the market, Tesla stands to gain significantly from this alliance. Finally, just a day ago, it might have seemed unreal that Jim Farley and Elon Musk would co-host a Twitter Spaces event. In actuality, though, Ford and Tesla have both realized how important cooperation is. Ford recognizes the value of Tesla's supercharger network, and Tesla knows that its success depends on the success of General Motors and Ford. This surprising partnership highlights how quickly the automobile industry is evolving and how fiercely the competition for market dominance in the electric vehicle space is intensifying. It's obvious that this isn't a zero-sum game. Even while some might wonder why Tesla needs Ford and GM to be financially successful, it's critical to understand that other manufacturers' performance supports Tesla's goal of accelerating the shift to sustainable energy. However, what are the practical benefits for Tesla from this? Let's examine a couple of arguments. Tesla's superchargers would surely make more money if Ford and GM made use of Tesla's infrastructure for charging. Furthermore, if Tesla were to provide specific parts, like batteries, to these automakers, it might create an unanticipated new market for the company. Long-term benefits of licensing Tesla's fully autonomous driving technology to other businesses are also evident. It's important to remember, though, that Tesla is not reliant on other automakers' success. Tesla is capable of continuing to grow on its own, bearing worries about possible monopoly-related government meddling. Since Stellantis and other automakers haven't completely embraced electric vehicles, it's clear that Tesla's hegemony isn't unchallenged. It's critical to understand that collaborations between Tesla and other automakers are advantageous to both parties. In this EV poker game, Ford CEO Farley seemed to have made a wise choice. It gives a potential to further commercialize the supercharger network. Ford may use Tesla batteries as a result of this partnership, which would be a huge modernization step. However, given Tesla's high battery demand and the restricted availability of their new 4680 batteries, other automakers may have a long way to go before using Tesla batteries extensively. Although the reason for Ives' assertion that Tesla requires Ford and GM in order to succeed is still unknown, recent events at the Tesla Gigafactory in Nevada provide some insight. The tour yielded several valuable insights, chief among them the astounding advancements in battery manufacture, innovation, and technology. Tesla has significantly lowered the cost of batteries by optimizing operations. Due to this advantage, Tesla may be able to provide EVs for less than $30,000 in the years to come, something that other market participants are still working toward. It's possible that Ives' observations during the factory visit convinced him that Tesla might begin supplying other automakers with batteries. Even if it might not happen soon, Tesla would benefit from this. A battery glut would facilitate a quicker switch to structural battery packs using the new 4680 batteries. This would raise profit margins or drive down car prices, increasing the value of Tesla's stock.